Good morning. Hi, welcome back to the latest installment of the Borak series. Last time, we dove into the fundamentals with our Hong Kong Head of Retail Research, Sonia. But today, we're switching gears. We've got our Senior Technical Analyst, Nik Ihsan, in the studio to guide us on the best timing to jump into the Hong Kong market. So a warm welcome to the show, Nik.
Thank you, Naguib. Happy to be here.
Great. Yeah, thanks for being on the show. Okay, Nik, we've been closely following your stock picks, and today I see that there's a report out to coincide with that, and they've shown impressive resilience even in this softer market for Hong Kong. So here's the burning question. Do you believe that our Hong Kong colleague Sonia's robust key support levels of 16,500 and 16,000 will stand firm? What's your take on this?
Okay, when I saw Sonia highlighted those key level, I cross-checked with the technical. So interestingly, when we do the chart, the level seem to be very much valid. So let me share the screen. Let's take a look how we actually assess the technical view for the Hang Seng. If you look on the Hang Seng, the index massive, I would say, decline last year has ended from 32,000 sub to 14,600. The recovery that come in afterward in line with global recovery, but however, the Hang Seng Index still stuck in pretty much in what we call a consolidation mode. Now, Sonia did highlight two key levels at 16,000 and 16,500, which is pretty much right within our initial support. If you look in this particular level, we are seeing that the ongoing correction, so the index is actually has come in toward what we call that the end. The end mean the recent consolidation within so-called falling wedge pattern could have ended. Falling wedge pattern is actually a bullish reversal pattern. However, while this pattern signal a potential reversal is yet not being validated, which means in order to validate, the index need to break a certain price level. And in this case, it should be right within at 18,400. However, what make it interesting is if you look in this what we call the RSI indicator, all this sort of movement right within so-called compression pattern has appeared to be ended. Following, I think, as per this week, is actually start to pick up above this so-called downtrend channel. So because of that, the spark of the momentum here could actually drive the index higher level. And cross-check another indicator at the bottom here, we have DPO or D trend level, which is actually tracking the small cycle within of the bigger cycle. So what you see on the indicator here, the decline that come in for the past few months was, I would say, softer or much more weaker compared to I would say 6 months earlier. So because of that, you are seeing much more easing kind of selling pressure. And that is actually gives some sort of indication that there are possibility of the what we call that a stronger recovery in the cut. So I think what Sonia mentioned is pretty much valid, and I do like what I see on the chart here. So what we think over here as the Hang Seng building some sort of support, we could actually see a potential reversal move ahead. So the next resistance should be at 18,500. The next one will be at 20,280. The next will be at 22,700, while the support at 16,000 and 16,500 is pretty much valid.
So if just getting this very quickly for the audience, we are looking at when you say the end is a positive DN, not a negative DN. So a position whereby selling is softer, potentially it may show a sign of reversal. And the next level is 18.5, and if we see that, then we've basically got a trend reversal.
Correct. I'm looking at that potential level for reversal soon.
Sure. Okay. Just moving on. Good that there's there's alignment between yourself and Sonia with regards to your views. With that said, again, she has highlighted 3 stocks on the last chat with her. Now, we want your views on the 3 stocks that were highlighted previously, which is Sands, China, MGM, and Trip. And she's very positive with them in a fundamental perspective. So I just want to see what you're seeing on those charts with these 3 names.
So what we saw here is actually quite interesting. So on my screen here, you saw 1928 stock code for Seng China. So Seng China, the recent so-called consolidation or recent downtrend move, I think has ended. One, because you are seeing a quite strong decline over here, has met so-called much more firmer support within at 19 or 20 Hong Kong dollar. So this is actually a major 61.8 of the previous upcycle. So because of that, this actually providing some sort of stronger support base for the stock. And this level has been tested at least 1 to 3 times for the past few weeks. And what makes interesting is what you saw here is another similar pattern with Hang Seng Index now. It's a falling wedge pattern, which in this case, the stock already break up above from this pattern. We mean the reversal signal has been validated. So the next question is what you saw, another high-low structure, which the stock also completed something that we call a return move. A return move is normal characteristic when you have a solid breakout move. The stock tend to come back to the level that they are breaking out earlier, and those level previously is a resistance, now turning into support. So when those happen, is actually reinforcing the idea of the bullish bias. So now the stock has created some sort of gap up, and we think in terms of the overall momentum reading has turned much more positive. So because of that, I think we highlight in the stock where we think this level is pretty much attractive to go in, because one, risk and reward ratio is much more attractive, because your risk is pretty much you are actually pretty accumulating within the major support level. And in terms of reward, the stock could actually trading higher, looking to test the net resistance at Hong Kong dollar 23.7 and 26.5 Hong Kong dollar, while the current support or the current level should be below 19.7. Now moving on into MGM. So for MGM, I think the characteristic for the stock, while it does look interesting over here, I'm want to look back into what we call that much more bigger time frame, which in this case the weekly chart. The reason being because in the weekly chart you can you actually saw much more meaningful kind of pattern. In this case, you are seeing some sort of the what we call that a triangle pattern, which actually it has been in play since April this year. So this 6 month long of the consolidation could also at the tail end, while the stock is actually building some sort of support within this particular level at 9 Hong Kong dollar, and we think there's a decent chance for the breakout to occur soon. One, you can tell the reading on the so-called D trend is pretty much I would say building kind of baseline within at zero level. So that means every time the stock tried to come down, the decline was pretty much capped. So because of that, you are seeing much more weaker reading in terms of the down cycle. So that means the selling pressure start to ease. And you can tell also on the RSI reading here, if you draw a simple line, you can see that the RSI is currently forming a series of high-low structure, which indicate that the overall momentum is start to improving a bit gradually. The thing is now, what we need is actually a solid boost. Solid boost, that means a sharp gain in order to validate all these little small bullish signal. So that means if the RSI surge past 50 point mark on the weekly chart, which in this case translating into what we call that stock price, it should be beyond I think if hit $10 could actually kickstart a new upcycle for the stock. And that's the reason why we put the next resistance target at 11 and 13 Hong Kong dollar, while the support color level should be below 8.4 Hong Kong dollar. Last but not least would be what we call that Trip.com. Trip.com, we are switching back into what we call that daily chart. So if you look back, those what we call that Seng China and Trip.com has showcased a similar kind of pattern, which means the correction that occurs since September has could be ended. One, you are seeing as much more stronger support base right within 250 Hong Kong dollar. There's a new series of high-low structure, and if you put what we call a Fibonacci fan line here, you saw how the stock price is actually confluenting within this 50% Fibonacci fan line. So indicating that there's an of the buying interest right within this level above 256, 260, and 269 region. So what we call a gap up for the past few days is actually gives some signal that the up cycle may have started. We are seeing the higher trading volume, the B trend also has entered the above zero level, which means it's just creating a new upcycle. And if you look back on the RSI pattern, you can tell here the decline over here, and then you saw a breakout move, and there's a new high-low structure above the long-term average line, which means the momentum now has started to shift upward from recently downward. So because of that, we think there's decent chance for the stock to trade higher as we put our technical target at 300 Hong Kong dollar and 330, while the colors of support will be below 256. So in terms of the risk to reward ratio, also appear to be quite attractive.
Okay, all right. That's a bit to unpack, but I think generally, the chart speaks quite loud, and I think our audience see that if there's a potential positive breakout upwards, and this again will be similar to what Sonia has mentioned in her previous video. All right, looks like looks like the three stocks have some leaks to run if given the signals are there. Nik, there's one more stock that you covered in your latest global technical analysis report, and I believe that this particular tech stock, which happens to be Lenovo, topped the computer digital sales chart on JD.com's basically survey during China's Double 11 sale. So shall we cover on that stock as well very quickly?
Yes, I think when Sonia mentioned that one of the stocks, so I quickly look that the stock pattern, the chart, and because of the stock in terms of technical attractiveness is, I would say, quite attractive. So hence we actually put it in our today's report. So what you're seeing right now is a much more bigger time frame weekly chart for the Lenovo. So Lenovo, I think, is quite similar with what we call that MGM. So that means these two stocks has showcased a strong so-called uptrend move for the past 12 months. Now, what makes interesting is because the move or the uptrend moves based on series of high-low structure that began since May, so indicating that the ongoing uptrend is still pretty much intact. We saw one solid uptrend line, and we saw another steeper uptrend line. So that means the shift, or we call that trend, is to actually start to be much more stronger. So a solid breakout move 2 weeks back, okay, above the major resistance, turn into a support level over here that has validated that the new upcycle was in place. And this so-called breakout also has been validated by the breakout move in RSI. If you look on RSI, it showcases a similar compression kind of pattern. So breakout from the compression pattern here often lead to what we call a stronger momentum move. So the breakout of course was backed by high trading volume, and we think there's a decent chance for the stock to continue to trade higher. So I think in terms of overall trend, we put our technical target right at Hong Kong dollar 11 and 13.5, while the cut loss level should be below 8.6 Hong Kong dollar.
All right, then we have 4 unique stock ideas, guys. We've got, again, just going to recap, we've got Sands, we've got MGM, we've got Trip.com and Lenovo. This will be in Nik's report, which is out today. But before we sign off, is there anything else you want to highlight, Nik, before we end?
I think the concern of what we call the recession as on risk of escalating geopolitics and so on. As you can see, the global equity market has started to begin its recovery. The US market quite strong for the past few days, weeks, and in fact we are seeing much more similar move across the region, from Malaysia, Vietnam, Indonesia, Hong Kong market. So I think let's capitalize on this kind of movement, because recovery when coming is moving relatively quite fast. So because of that, I think we have to be much more, I would say previously we are quite pessimistic with the market, and now market start to turn much more better or more favorable. I think it's best we take advantage on that.
Yeah, I'm a bit optimistic, especially in Asia, coming into year end, right? Well, again, big thanks to Nik for sharing his insights today. All right, everyone, remember, you can get the latest market news and research from our social media channels. We are available on Telegram, LinkedIn, and YouTube. So be sure to follow us there. If you're interested to find out how you can trade with Maybank, you can also reach out to our sales representatives or apply for an account via Maybank to you using the QR code on the screen. With that, thanks everyone for tuning to today's Borak session. This is Naguib Hussin signing off. Thank you very much.
do 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 do